2026 Social Security payments explained. Who may receive $1,800 or $2,400. New rules and payment dates every recipient should know before the next deposit arrives. Millions of people across the United States who collect Social Security benefits today may actually be getting less money than they could qualify for under the current rules. Not because the government took funds away, not because a payment error happened, but because no one clearly explained how the 2026 payment system works, who qualifies for each amount, when deposits are expected to arrive, and what steps are needed to make sure every dollar reaches the right account without delay. That changes right now. What you are about to hear is not built on internet chatter. It is not another rumor spreading through social media circles, and it is not misleading clickbait made only to draw views without giving useful information. Every payment amount, every deposit date, every eligibility rule, and every recommended action discussed in this guide comes directly from official Social Security Administration publications, verified benefit tables, and policy details publicly available through ssa.gov. Two key numbers sit at the center of this entire discussion: $1,800 and $2,400. By the time this video ends, you will know exactly what those figures mean. Which amount may apply to your personal situation, when your payment should arrive based on your birthday, and the three important actions you should complete before this week ends to protect every dollar you earned during your working years. Stay alert, because the details matter. The difference between understanding these rules and ignoring them could mean receiving the full benefit you deserve or unintentionally leaving money behind every single month during retirement. Why your 2026 Social Security payment looks different from last year. Every January, the Social Security Administration recalculates monthly benefits for everyone receiving payments through the system. This yearly update is called the Cost of Living Adjustment, usually known as the COLA. The COLA is not a bonus payment. It is not a special gift from Congress. It is not a separate program that requires signing up. Instead, it is the automatic annual adjustment applied to Social Security benefits to help preserve purchasing power as inflation changes the cost of goods and services over time. The SSA determines the COLA using the Consumer Price Index for urban wage earners and clerical workers, known as the CPI-W, which is published by the Bureau of Labor Statistics. When inflation rises, benefit amounts rise too. When prices stay steadier, the adjustment is smaller. This yearly adjustment applies to every major category of Social Security benefits, including retirement payments, disability benefits, survivor benefits, and supplemental security income. For 2026, the Social Security Administration applied the new COLA across all benefit categories, which means your monthly payment is different from what you received in 2025. If you have not checked your updated 2026 benefit amount through your personal My Social Security account at ssa.gov, there is a real chance you do not know the exact amount you are currently entitled to receive each month. And confirming that information is the first action step we will cover before the end of this guide. The $2,400 amount and who it generally applies to. According to officially released 2026 Social Security benefit statistics, the average retirement benefit for a retired worker after the 2026 COLA update is about $2,400 per month. This figure is an average, not a guaranteed amount, for every recipient. It reflects the middle range calculated from SSA data tables and generally represents a retired worker who claimed benefits at or after full retirement age, while keeping a fairly steady work history throughout a career. Understanding how the Social Security Administration calculates your personal benefit is extremely important because this is where confusion begins for many recipients. The SSA does not send identical monthly checks to everyone. Your individual benefit amount is calculated using a formula based on your 35 highest earning years, with each year adjusted to account for changes in wage growth over time. The final result of that calculation is called your primary insurance amount, or PIA. Your monthly retirement benefit is based directly on that number. Several major factors decide whether your payment lands above or below the approximate $2,400 average. First, the total number of years you worked matters a great deal. If you worked fewer than 35 years, the Social Security Administration inserts 0 income years into the calculation for every missing year. Someone with only 28 years of reported earnings will have 70 years included in the formula, which lowers the final monthly benefit compared with someone who has a complete 35-year earnings record. Your lifetime earnings level also directly affects your monthly benefit. Higher average earnings over your working career usually produce a larger payment. The SSA formula is progressive, meaning lower lifetime earners receive a higher percentage replacement of their income, while higher earners receive a smaller percentage replacement. However, in actual dollar terms, stronger earnings histories still lead to larger monthly checks. The age at which you claim benefits is another major factor. In fact, this single issue explains why many retirees receive payments below the $2,400 average. We will explain that more fully in the next section. For a worker retiring at full retirement age in 2026, with a strong and consistent 35-year earnings history, the maximum retirement benefit can reach about $3,800 per month. For the average retired worker claiming benefits at full retirement age with moderate earnings over a career, the benefit usually falls near the $2,400 range. The best way to determine your exact number is to log into your My Social Security account at ssa.gov and review your personalized benefit statement. This report shows your actual indexed earnings history, your calculated primary insurance amount, and your confirmed 2026 monthly payment after the COLA increase has been applied. The process takes less than 10 minutes and gives you your exact, legally determined benefit amount, rather than an estimate or national average. The $1,800 amount, who it affects, and why it is lower. The $1,800 monthly benefit range applies to a very large group of Social Security recipients. Understanding why this amount falls below the $2,400 average is extremely important because the reason is permanent and affects every future COLA adjustment tied to the benefit. The main reason many recipients receive around $1,800 per month is early retirement claiming for people born in 1960 or later. Full retirement age is 67. That is the age at which you qualify for your full calculated benefit without reductions. However, the Social Security Administration allows people to begin collecting retirement benefits as early as age 62, giving up to 5 years of early access before reaching full retirement age. The trade-off for claiming early is a permanent reduction in your monthly benefit amount, and the reduction is significant. If you begin collecting at age 62, your payment may be permanently reduced by as much as 30% compared with what you would have received at full retirement age. Claiming at age 63 results in a slightly smaller reduction. Claiming at 64 lowers the reduction even further. But any age before 67 results in some level of permanent reduction. Every early claimant needs to understand one critical point clearly. The reduction does not disappear once you turn 67. Reaching full retirement age after claiming early does not restore your payment to the full amount. The reduced amount becomes permanently built into your monthly benefit. Future COLA increases are then applied to that smaller base amount, meaning the dollar gap between early claimers and full retirement age claimers gradually grows over time. This permanent reduction is one of the main reasons so many retirees receive payments closer to $1,800 instead of the approximate $2,400 average. The $1,800 range also includes many supplemental security income recipients. SSI is completely different from Social Security retirement benefits, and understanding the distinction is very important. Social Security retirement benefits are earned through work history and payroll taxes paid throughout your career. SSI is a needs-based assistance program administered by the Social Security Administration for seniors aged 65 and older, people who are blind, and individuals with qualifying disabilities who have very limited income and financial resources. According to the SSA Annual Benefit Update, the maximum federal SSI payment for 2026 is approximately $967 per month for an eligible individual, and about $1,450 per month for an eligible couple before any state supplements are added. The $1,800 range can also include survivors receiving benefits through a deceased spouse's or parent's earnings record, as well as dependents collecting benefits through another worker's Social Security account. In these situations, the final monthly amount depends on the earnings history of the primary account holder and the relationship between the recipient and that worker. Your official 2026 payment schedule based on your birthday. Knowing how much you receive is only part of the picture. Knowing when your money arrives can reduce stress, prevent unnecessary calls to your bank, and help you organize your monthly budget more accurately. The Social Security Administration uses a birthday-based payment schedule for most retirement benefit recipients in 2026. If your birthday falls between the 1st and the 10th of any month, your Social Security retirement payment is sent on the second Wednesday of the month. If your birthday falls between the 11th and the 20th, your payment is sent on the third Wednesday of the month. If your birthday falls between the 21st and the 31st, your payment arrives on the fourth Wednesday of the month. This three-part payment schedule applies to most Social Security retirement recipients currently receiving benefits. However, there is an important exception that creates a lot of confusion online. If you began receiving Social Security benefits before May 1997, or if you receive both Social Security retirement benefits and SSI at the same time, your payments follow a different timeline. In that situation, your Social Security retirement payment is generally issued on the third day of each month, while your SSI payment is typically sent on the first day of each month. The Social Security Administration also includes a protective rule in both schedules. Whenever a scheduled payment date falls on a weekend or federal holiday, the payment is moved earlier to the previous business day. This is called an early payment, and it is a fully documented and officially confirmed SSA practice, explained in the agency's published payment calendars available through ssa.gov. This early payment rule explains much of the online discussion about checks arriving ahead of schedule or unexpected early deposits. When recipients in online groups mention getting an early payment, they are usually describing this exact situation. A payment date shifted earlier because the original date landed on a weekend or holiday. It is not an extra benefit payment, and it is not a bonus check. It is simply the SSA making sure beneficiaries do not face delays because banks and government offices are closed. Write down your specific payment date based on your birthday and benefit category. Set a reminder several days in advance, and allow your bank or credit union 1 to 3 business days to process the deposit after the SSA releases the payment. Direct deposit timing can vary between financial institutions. A payment released by the SSA on Wednesday may not show fully available in your account until Thursday or Friday, depending on your institution's internal processing schedule, state supplements, and why your location affects total benefits. For Social Security retirement recipients, monthly benefit amounts are set at the federal level. The Social Security Administration calculates your benefit, and that figure stays the same no matter which state you live in. Whether you live in California, Alabama, Wyoming, or anywhere else in the country, your Social Security retirement amount does not change based on location. SSI works differently. While the federal government sets the baseline SSI benefit, many states add extra money, known as state supplemental payments, or SSPs, for qualifying SSI recipients living in those states. The amount of these supplements varies widely depending on the state, and in some situations, the difference can equal several $100s per month. California offers one of the largest SSI state supplements in the United States. SSI recipients living in California may receive significantly more than the federal baseline because of the state supplement program, potentially raising total monthly benefits well above the federal amount alone. New York also provides a meaningful supplement, especially for seniors who live independently rather than in institutional care settings. Alaska, because of its extremely high cost of living compared with much of the continental United States, is also among the states with the highest combined federal and state SSI benefit totals. On the other hand, states such as Texas, Georgia, Mississippi, and several others currently do not provide any additional SSI state supplement. Recipients in those states generally receive only the federal baseline payment without extra state assistance. Another layer of complexity exists in states such as California and New York, where the supplement is handled through a separate state agency instead of directly through the federal SSA. Recipients in these states may receive 2 different deposits during the month, one from the Social Security Administration and another from the state agency responsible for the supplement. If you receive SSI in one of these states and notice only one deposit, contact your state social services office right away to determine whether a second payment may be missing. If you receive SSI and have never confirmed whether your state offers a supplement, Research that information this week. Search online using your state name together with the phrase SSI State Supplement 2026 to find official government resources. You can also contact the SSA National Helpline at 1-800-772-1213 and ask whether you are receiving the maximum combined federal and state benefit available based on where you live. Many seniors throughout the country receive less money than they are legally entitled to simply because nobody told them about additional state assistance. 3 overlooked benefits many recipients never claim beyond the standard monthly payment. There are 3 additional benefit opportunities that a large number of Social Security recipients qualify for but never pursue. Each of these options can increase total monthly income, and each one is available through the normal SSA system without any cost. Benefit number 1, a formal earnings record review. Your Social Security benefit is calculated using your earnings history. That record is built from decades of employer tax reports and your own tax filings. Mistakes sometimes happen. Employers occasionally report inaccurate earnings figures. Entire years of income can even disappear from the record. Because your retirement calculation uses your 35 highest earning years, a single missing high income year can reduce your monthly benefit significantly. Every Social Security recipient has the legal right to request a formal review of their earnings history and the benefit calculation based on that record. If the SSA confirms an error and approves a correction, your monthly benefit can be adjusted upward going forward. Requesting a review costs nothing and usually requires only a phone call or secure message through your My Social Security account. Benefit number 2. Unlimited earnings after reaching full retirement age. If you have already reached full retirement age and continue working in any capacity, you may earn any amount of employment or self-employment income without reducing your Social Security benefit. Many recipients are surprised by this rule because they assume working during retirement automatically lowers their monthly payment. Before full retirement age, the Social Security Administration applies an earnings test that can temporarily reduce benefits if you earn more than a specific yearly limit. But once you pass full retirement age, that earnings restriction disappears entirely. You can earn $50,000 per year, $100,000 per year, or more without losing any portion of your Social Security retirement benefit. If you are still working and delaying benefits because you fear an earnings penalty, confirm your exact full retirement age immediately and verify whether that concern still applies to your current situation. Benefit number 3. Spousal and survivor benefits. If you are currently married, previously divorced after at least 10 years of marriage, or widowed after losing a spouse, you may qualify for spousal or survivor benefits that exceed the amount available through your own work record. Spousal benefits may equal as much as 50% of a living spouse's full retirement benefit. Survivor benefits for widows and widowers can reach up to 100% of what the deceased spouse was receiving at the time of death. Many widows and widowers are currently collecting benefits based only on their own earnings history, while legally qualifying for much larger survivor payments based on a spouse's record. Call the Social Security Administration directly at 1-800-772-1213 and ask a representative to review both your personal earnings record and any possible spousal or survivor benefit eligibility. That single conversation has led to higher monthly payments for countless recipients who never realized the option existed. Fraud warnings every recipient needs to understand. Whenever major Social Security information spreads widely online, scam networks quickly take advantage of confusion and attention to target recipients. Protecting your benefits begins with understanding what legitimate SSA communication actually looks like. The Social Security Administration will never call you unexpectedly and ask you to verify or provide your Social Security number over the phone. The agency already has your number on file. Anyone claiming to represent the SSA while asking for your Social Security number is likely a scammer. End the call immediately and report the incident to the SSA Office of Inspector General. The SSA will also never demand payment through gift cards, cryptocurrency, prepaid debit cards, or wire transfers for any reason. Those payment methods are commonly used only by fraud operations. No legitimate federal agency will tell you to settle debts or fees using those forms of payment. There is no special enrollment program, processing fee, or activation requirement necessary to receive your 2026 Social Security benefits. Any website, phone call, email, or video claiming you must pay money or complete a special registration to unlock larger payments is a scam. The only legitimate official source for Social Security benefit information is ssa.gov, not ssa.net, not ssa.org, and not any imitation version of the address. ssa.gov is the only official domain you should trust for accurate Social Security Administration information. Your 3 action steps before the weekend. Step 1. Log into or create your My Social Security account through ssa.gov. This account is free, federally protected, and the fastest way to access your personalized 2026 benefit details. Inside the account, you can review your confirmed 2026 monthly benefit amount after the COLA increase, your complete payment history, your indexed earnings record, and any notices or required actions connected to your account. If you have never created an account before, you will need your Social Security number, a valid email address, and your current United States mailing address to finish the setup. After logging in, verify that your 2026 benefit amount correctly reflects the COLA increase. If the amount looks inaccurate or different from what you expected, document the difference and contact the Social Security Administration directly to request a review. Step 2. Confirm your SSI state supplement status. If you receive SSI benefits, search online using your state name together with the phrase SSI State Supplement 2026, or call the SSA helpline at 1-800-772-1213 and ask whether you are receiving the maximum combined benefit available in your state. Ask this question even if you already believe you received the supplement, because benefit amounts can change every year and confirmation takes only a few minutes. Step 3. Verify your direct deposit information and mailing address. Log into your My Social Security account and open the Payment Information section. Confirm that the bank account and routing numbers listed on file match your active account information. If you receive paper checks, verify that your mailing address remains current and accurate. If you moved recently, switched banks, or opened a new account within the last year without updating the SSA, your payment could be delayed or sent to the wrong destination. This simple verification process takes less than 5 minutes and can prevent delays that might otherwise require weeks to correct through the SSA system. Your benefits belong to you. You earned every dollar the Social Security Administration sends you. Those payments represent decades of work, decades of payroll tax contributions, and decades spent building a career and supporting your life while expecting these benefits to be available later in retirement. The 2026 payment levels of approximately $1,800 and $2,400 are not gifts, and they are not government charity. They are the return on a lifetime of contributions into a system funded through every paycheck you earned throughout your career. You deserve to receive every dollar that system owes you on the correct date, in the correct amount, with complete understanding of every available option that could maximize the money deposited into your account. Share this information with someone who may need it, a neighbor, a family member, a friend, or someone in your community who has been confused about their payment amount or worried that their check might be incorrect. One important conversation based on accurate information can fix a benefit issue that may have been costing someone hundreds of dollars every month for years. Your benefits are your money. Make sure you are receiving every dollar you earned.